Jindal Stainless, Nigel, is the next management with us.
Well, that's right. Jindal Stainless, that's the next management on our radar. The company reported actually a good set of numbers. The EBITDA margins did show some kind of improvement. To discuss this, what went on in the past quarter, what's the way ahead, we're joined by Mr. Tarun Khulbe, the CEO and CFO at Jindal Stainless. Hi, sir. Good morning. Good to have you on the show. Interested to hear how was the quarter and the way ahead. Let's focus first on volumes. I recall you telling us that volume growth should be in the vicinity of around 9 to 10%. At the half-year mark, you've done around 11.5%. So for the year, what kind of volume growth will you be looking at? And also touch upon exports. That market continues to be in a bit of a tizzy. I recall when you used to do more than 15% of your volumes were exports. Now, Europe is a key market for you in terms of the exports. They will be implementing carbon border adjustment mechanism. Will this lead to lower volumes out there?
Thanks, Nigel. So, so far as we as a company is concerned, you're right that we consider export market also important. And while predominantly we are a domestic focused company, so for us in the export, US and Europe, both are definitely one of the true major markets. And as we can see that uncertainty in the global market is there as of now. In fact, for the past some months, that uncertainty is constantly prevailing because geopolitically and globally, the policy changes, whether it is in US and also in Europe, so many changes constantly are happening and creating a lot of confusion in the market. Now, another aspect which you have touched, that is also true, that CBAM is going to get triggered from the month of January in Europe, and definitely that will also have certain impact. Beyond that, some quota and all also is in discussion. But the point is, there again, a bit of uncertainty because the developer has to come out with clear guidelines, clear benchmarks, so confusion remains. Now, under the circumstances, while we are constantly watching these markets and dealing in the exports wherever we see the kind of opportunity, but we remain focused on our domestic market, which is growing, which is constantly growing, and we are finding that opportunity. Looking at this, I will say that so far as our volume growth of 9 to 10%, whatever we have, the guidance what we have given, we are confident that we will be meeting that. But export, we will be watching and trying to do more as a balancing number under the current situation. But overall volume growth, whatever guidance we have given, we are still maintaining that.
Okay, all right. Let's focus on the profitability then. You have done better EBITDA per ton than the guidance, right? Earlier, you were guiding for 19,000 to 21,000. What contributed to this? And do you want to upgrade your guidance on terms of EBITDA per ton? Also, tell us about the pricing trends internationally on stainless steel. Is it higher in quarter 3 in comparison to quarter 2?
Okay, so on one hand, I just talked about that the volume growth, what we have given. So all this volume growth, there are another aspect of that is that constantly we have been saying, even at the end of the last quarter call also, I had said that we as a company are constantly focusing on the value-added products and the products which are higher end applications and all that. And our subsidiaries are now performing much better, and we are more and more value-added product like cold roll we are able to sell into the market. So all these aspects, along with the increased volumes, is helping us in improving our EBITDA numbers. Or obviously, the cost is also they are helping us in keeping a bit in control, and we are able to hit our EBITDA numbers.
But do you want to upgrade it, sir, from 90 to 21,000? Do you think now it can be towards the higher end, 21,000 rupees per ton?
So, Nigel, at this stage, we would like to be watchful. As I said, that there is a continuous, so many uncertainties which are floating around. So, we would like to maintain our guidance, but and we believe that at this stage, we would like to maintain that.
Okay, 19 to 21,000 with 9 to 10% volume growth. Pricing, how is it internationally? I understand that prices have improved for stainless steel, correct?
So prices again, on one hand, the prices are a factor of the raw material all along. We have been saying in the stainless steel, but
Okay.
yes, there are sentiments also which impact. So when these kind of uncertainties come, sometimes the pricing pressure also comes. Now in India also, I think you must be aware of like the uncertainties due to different government decisions regarding TCO, allowing import, not import. That also impacts the pricing pressure. So, but at the same time, as I said that for us it is more of raw material, and then
Okay.
we try to see. So as of now, I'll say in India there is a somewhat downtrend in the pricing we can see,
Okay.
but internationally also it impacts that way.
Okay, all right. In India, it's a little bit of a downtrend. I think some checks tell me that, globally prices have improved, but as of now, you're saying no big trend on that front. So we take that point on board. You briefly mentioned that VAP, that's the focus area. VAP as a percentage of sales, what is it? Where is it headed? And briefly, you could tell us defense. That's another focal point for you all. You all have mentioned that numerous times. It is a smaller part. Where is it headed? Currently, how much does it contribute?
So defense, Nigel, if I say that it is more of a niche product, and that is something we take more proud, because by doing that, we are able to demonstrate our even capability on the quality front and the quality standards. And this helps us to substitute many imports which are used, because in this defense, whatever material we give, it goes into the niche products of even missile launcher and submarine launcher, those kind of applications. And this also supports, of course, Atmanirbhar Bharat. So this is a beginning, I will say. So far as but we are building on it. We are building more of our capabilities.
Yes.
We have made some investments into the facilities which will help us in becoming more and more equipment, more and more grades, so that we can supply for these applications.
Final question then, sir, and I'm looking for numbers here. CAPEX guidance for the year, how much is it? If you could tell us how much have you spent, CAPEX? And net debt number has come down a little bit despite the CAPEX that's underway. Where is this number headed? CAPEX.
Okay, so CAPEX guidance, Nigel, we had given 2,700 crores for this FY 26, and out of that, 1,260 crores now in the H1 we have already done. So we are on course of that. And so far as our net debt is concerned, which was around 4,000 crores in March 25, we had given a guidance of 3,500 to 3,700 for this financial year. And at the end of H1, we are at around 3,650. So I think that is also, and our ratios, whether it is debt to equity and debt to EBITDA, they all are very much in control, one of the best in the industry.
Okay, all right. Sir, it's a pleasure having you on the show. Thanks a lot for joining in. You've given us a brief idea, a sneak peek into how you've seen things panning out. The last quarter was good, actually, but we'll track you to some of these numbers. Thanks a lot for joining in.
Okay, that's Jindal Stainless. By the way,